Hi, welcome to Christensen Wealth Management. I'm Michael Christensen, and thank you for taking time out of your day to watch this weekly stock market update for the week ending Friday, October 26, 2018. This is being recorded on Thursday night, the 25th, and the charts will be as of the close on the 25th. Before I jump into the charts and commentary, I would like to begin with the quote of the week, and this week's quote is from Dorothy Canfield Fisher, who once said, "A mother is not a person to lean on, but a person to make leaning unnecessary." Those are some very wise words from Dorothy Canfield Fisher. Well, the craziness in the stock market continues. There is no shortage of drama. The Dow Jones was down about 600 points on Wednesday, and then on Thursday it was up 500 for a while and closed a little bit above 300. But then Wednesday night, some earnings were released from companies, and as of the recording of this video, the futures are down pretty significantly. So it'll be very interesting to see what Friday brings, for sure. But the charts that I will show you today are extremely bearish. There is all kinds of negative signs and signals and patterns on these things, so be very careful with your hard-earned money, retirement accounts, and other investments, 401ks, that kind of thing. There is one chart I want to show you before I jump into the indexes, and that is the Smart Money Index from Bloomberg. Let me bring it up for you. Take a look at this. This chart of the Smart Money Flow Index measures what smart money is doing with their investing. Smart money is typically described as investors who do not invest in the first hour of trading. Experienced investors or experienced institutions that know what they're doing when it comes to investing typically invest at the end of the trading day after the trading day has calmed down and formed a trend. Inexperienced investors typically invest in the morning and typically invest with market orders that are filled right away in the morning at any price. So once you take out the first hour of trading and measure what happens the rest of the day, you get a sense of what the smart money is doing with their money. And this chart shows that the smart money flow in red is declining at a record pace. That means that experienced investors are leaving the stock market as fast as they can. And that is not a good sign because, as you can see, the Dow Jones Industrial Average in green typically overlays nicely with the Smart Money Flow Index, and as of right now, the Dow Jones Industrial Average is way up here in the corner, and the Smart Money Flow Index is way down here at the bottom. So that tells me that investors should be very careful with their money. Let's just go ahead and move right into the primary indexes. And I'll begin with the Dow Jones Industrial Average, and we'll take a look at how that is currently. Let's take a look. Looking at this chart of the Dow Jones Industrial Average, you can see the very steep decline that occurred following October 3rd. And the Dow Jones has declined by 7.3% since the high of October 3rd until the close of October 25th. That is a very significant decline in a matter of 3 weeks, and has taken the Dow Jones Industrial Average all the way back to right here, which is January 3rd. So 10 months of stock market gains were gone in 3 weeks. That's not a very good sign for the Dow Jones. And the 5-day moving average in red is below the 20-day moving average in blue, indicating short-term weakness. And let's look at the intermediate term indicators, which are a longer time period. And that 20-day moving average in blue, it has now crossed below the 50-day moving average in purple as of October 23rd, indicating intermediate term weakness as well. So right now, everything is very bearish for the Dow Jones Industrial Average. Significant caution should be taken when evaluating this particular stock index. And let's go ahead and take a look at the S&P 500. Looking at this chart of the S&P 500 stock index, you can see the decline similar to the Dow Jones. On October 3rd until the 25th, when this is being recorded, the S&P 500 dropped from the high on the 3rd till the 25th, 8% in 3 weeks, and took the S&P 500 all the way back to where it was on January 2nd, right there. So that is not a good sign for the S&P 500. It has also taken all of the indicators into a weak or bearish sentiment. The short-term indicators, the 5-day moving average in red, is below the 20-day moving average in blue, indicating that short-term weakness. And the longer-term indicators, the 20-day moving average in blue, is below the 50-day moving average in purple as of October 17th. So we have an intermediate term weakness confirmation as well. So with everything being weak on these technical strength indicators, I would just say again, please use extreme caution. This is not a very friendly market at the moment. And if we go out a little further, I want to show you the longer term trend and how it has been broken and how it started. I'm going to go ahead and change this chart over to a candlestick chart. And let's start the first point right there, February 10th, 2016. And let's draw that line right up to where we are today. And you can see that as of February 9th, 2016, the S&P began the line, touched it again there and bounced off of it, touched it again there February of 2018, touched it several times in here in March of 2018, and a few more times in April and May, as well as June. And we came down and we broke that trend line that is basically 2.5 years long. We broke it October 10th. And if I zoom in a little bit, you can see that I'll switch it back to a line chart there. You can see that we broke it, rallied back up, kissed that line one last time from below to verify that that is now a resistance line, and then the S&P, once it touched that line one more time, it just rolled right over and fell out of bed. So much is bearish about the S&P 500, so don't ignore those details and be careful with your money. Looking at this chart of the NASDAQ Composite Stock Index, you can see that this too has had a very incredible decline since really October 3rd as well. The NASDAQ Composite, which hit a high on most recently on October 1st, from the high of October 1st until the close of October 25th, the NASDAQ Composite has declined by 9.7%. That is a pretty significant drop, and that means that the NASDAQ has now gone back to where it was on January 18th. So it too has lost 10 months worth of gains in 3 weeks. And the short-term indicators, the 5-day moving average in red is well below the 20-day moving average in blue and falling, indicating extreme short-term weakness and or bearishness. The intermediate term indicators, which measure days to weeks, the 20-day moving average in blue is well below the 50-day moving average in purple as of October 10th, and both are in decline. Again, that is very bearish on the intermediate term timelines. And if I go back even further, I want to show you how and when this trend developed and when it broke. Let's draw a trend line from the lows beginning in on June 27th, 2016. And let's draw that line straight up there. And let me see if it continues on down. Nope, it doesn't. It begins June 27th, 2016. And you can see that the NASDAQ began its first point there, bounced off it here November of 2016, rallied on up, came down, broke it, and bounced off it February 9th, 2018, rallied up, came down, bounced off it, bounced off it, bounced off it again multiple times throughout the spring, April, May, June, or April and May, and then bounced all the way back up for one last run. And as of October 10th, this 2.5-year trend line has been broken with conviction. And if I zoom in, you can see that once we broke that 2.5-year trend line for the NASDAQ composite, it rallied up one last time and touched that line from beneath to verify that it is no longer support. It is now a resistance line. Once that resistance held, the NASDAQ composite was rejected and it fell rapidly from October 17th until the 25th. So much caution is needed because the trend line being broken is extremely bearish, and as I already said, the short and intermediate term indicators are also extremely bearish. So please be careful. None of these indexes look very attractive at the moment. The Dow, S&P, and NASDAQ, that is. Let's just quickly take a look at some of the bonus charts from the prior 2 weeks to see how they're doing, and then we'll wrap it up. Here is the chart from last week showing the S&P 500 Home Builders Industry Index. All I wanted to show you was the continuing trend. Last week we were at a kind of a right here at the low point. We bounced for the day and then fell again and bounced up to a little lower high. So the home builders are still in a pretty steep decline with no sign of much strength at all yet. So that is a indicator that perhaps the residential home building sector of our economy is not doing too well. Let's take a look at overseas. Here is a chart of the Shanghai Composite Stock Index, and as you can see, China is still in a pretty steep decline. There's not much more to say about it. I just wanted to show you what's going on in Asia. And let's take a quick look at what is going on in the European Union. Here is the chart of the German DAX stock index, and I just wanted to show you what it's doing, and it too is in decline and accelerating to the downside. If I draw some trend lines in there real quick, you can see that it is in fact accelerating. Here's the first trend line, and then here's the second trend line, and then the third trend line. You can see obviously, boom, straight down. I mean, that's not good. So since this high right here on January 23rd, the German DAX has been accelerating lower and lower. So use caution when evaluating both Asian indexes and investments as well as European. Thank you again for watching this market update. Before you go, please do me a favor and click on the subscribe button on this YouTube channel and click on the little bell next to it so you'll be notified whenever additional videos are posted. And in the top right hand corner of christensenwealth.com and in the summary description of this video, you will find links to the Facebook, LinkedIn, and Twitter pages for Christensen Wealth Management. Please visit those pages when you have time and like or follow the page while you are there. Thanks again for watching, and again, as my friend Lance Roberts likes to say, getting back to even is not an investment strategy. So be careful with your money, and the most important thing is to protect what you have in crazy times like this. We'll see where we go in the week ahead. Until then, have a great week, and I'll see you again in about another 7 days. Bye-bye.